Crypto markets remain stuck in ranges, with vol continuing to trend lower. The Trump-Elon frictions triggered some temporary risk aversion, but a GoldiLocks jobs print helped Bitcoin bounce back to 105k. Option flows also point towards a calm summer before more action in September. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got my man Dave in the studio from FRNT. And dude, the bromance is over.
What, ours?
No, never.
That really would have tanked crypto, right?
I mean, can you believe it? It's like, macro data doesn't matter as much anymore. Now it's about whether Trump or Elon get along. Yeah, and they were going crazy the other day. Right?
Yeah. I mean, I think it was kind of inevitable, right? Two big egos like that at some point we're going to blow up. I mean, God, it blew up in some pretty
but I mean, it took the
phenomenal way.
It took the Nasdaq down 1%. It took Bitcoin to 100k.
Yeah, it was.
Well, I don't know if that was the only factor, but it kind of felt like it that day.
Yeah, it did. I mean, like the Nasdaq thing was a little bit more understandable, right? Because Tesla was getting hit, and there's obviously a direct implication there. In a weird way, you kind of think again, like for Bitcoin, it's like to be, this non-sovereign, there's no CEO of Bitcoin, like you kind of feel like it almost reinforces the case for Bitcoin. But I think it maybe went to show, like, we kind of took out those highs the other week, and then we came off, was consolidating, and sometimes you need something to flush out a little bit of leverage, some stale positioning, so that you can sort of build on. And it just felt like that was probably an excuse for some stale longs to just go.
100k didn't get breached though, so that's psychological level.
Yeah.
Right?
So, but it still looks pretty good. And what we're back to when we were last speaking in the studio a few days ago.
Yeah, but I mean that was triggered by this non-farms print. So let's talk macro. So what do you make of that jobs data?
Yeah, it was all like, again, it was kind of, it's in keeping with the theme that I've been tracking in terms of this like kind of resilient labour market, slowing, not collapsing US growth, all whilst in this sort of disinflationary environment. So it was softer, but still quite resilient. It's just everything just kind of looks okay, which say not too hot, not too cold. All looks quite GoldiLocks. So because
there was some jobs, preliminary jobs data that pointed towards weakness, like the ADP number was a big miss, and some household survey data has been kind of going lower, right?
So there's definitely signs of underlying weakness in the labour market, and I think it's something to look at. And again, I think that the economy is slowing. It's just not collapsing, and
the reason that's GoldiLocks, because in my understanding of GoldiLocks is actually growth going up but no inflation. Okay. Whereas it feels like the reason this is GoldiLocks, as in it's favourable for the market, is because a slowing growth without much inflation allows the Fed to cut. Basically.
To cut rates,
But the Fed rate cuts that were being priced have dropped though. We're looking at only 1.8 cuts till the end of the year apparently now.
Yeah, right? But that's sort of come in alongside the fact that Trump has done a 180 on the fiscal stuff, right? Because Besant was saying that we're going to cut deficits from 7% to 3%. So then you're having to price in a much sort of lower sort of growth profile and outlook. And then the same with the tariffs, right? The hits of growth from tariffs was going to also sort of weigh. So now I think the market's kind of revised higher its sort of growth expectations. And I think we're very much in almost in a Biden-like economy of they're going to run really high deficits, which is going to maintain growth, and we're going to probably frustrate continually the calls for a recession, because it's going to be really difficult to see anything meaningful, at least. Whilst we're still running really high deficits. I mean, ISM services did go into contraction territory, but barely. So growth is definitely slowing, that's for sure. We're still in this disinflationary world. I think the market's underpriced for cuts, but again, it's difficult with...
So you think we'll get more than 2 cuts?
I think so, yeah.
Okay.
I think obviously over the top of all of this is the tariff uncertainty. But right now, if you're sat in the Fed's chair, it probably looks pretty comfortable, that we don't need to sort of rush into anything. But the bias will still obviously be to lower rates. But for markets, we're a function of rates and liquidity. And when I think of GoldiLocks, it's you want things to be soft enough so that rates remain easy, liquidity kind of remains easy. You don't want it so soft that we go into it's recession and the economy's collapsing, because then we get this knee-jerk risk off, and then equally you don't want it sort of too like growth being too strong that the Fed are hiking rates like they did in 2022, and risk gets absolutely annihilated because of that sort of monetary tightening. So right now we're just in this really nice, easy.
So it's
easy
like kind of a
pace.
slow grind up scenario for risk assets, basically in this environment.
Yeah,
right?
yeah, I think so. And given what we were pricing back in April, we were pricing some pretty extreme sort of risk off scenarios. I still think the market's underweight risk. It needs to re-risk higher. And I think we see that over the coming weeks and months. And again, the problem is you get like the Trump and Elon spat. We had, what was it, just last week when sort of Trump again sort of started picking on China again. And then they had a good call on Thursday. So everything's good again. So I think this is going to constantly be this like uncertain picture around the macro because of the headlines and Trump's volatility with that. However, if you're looking at it underlying, we're in, for me, a kind of GoldiLocks environment, which I think will win out over the coming weeks and months, and people will have to sort of re-rate higher.
Yeah, it's interesting. Like, I trade volatility, right? Obviously, that's my thing. So the VIX is like the volatility of the equity market. Let's say it's like the main barometer, the main benchmark. And generally my thoughts around the VIX were that all this uncertainty that we talk about that has been thrown into the mix should be supportive to the VIX and should keep things relatively volatile, right? But after that non-farm print, the VIX got whacked and we are back to like February type levels with like 16 handle on the VIX. So the volatility market is starting to tell you that actually it's starting to look quite likely now that we're going to go a bit quiet over the summer, right? Yeah. And we're seeing that in crypto as well, right? Crypto curves are all collapsing. Crypto vol curves are all collapsing into contango. So one of the big chunks of flow that we saw in options market this week, in the crypto options market, was July call sellers, right? Up to say like that 120, early 120K area, right? And then against those July calls that they're selling, they're buying a big chunk of call spreads, like the 115K, the 140, buying the 115K, selling the 140K calls, so as a September call spread. So net, quite a vol negative trade, and also selling gamma in July against wanting to own directional exposure in September. So it's kind of like whoever did that spent a chunk of premium, did it in quite big notional, and seems to be betting on the fact that we've got a very grindy sort of move up if we get one over the summer, but the real meat of the move comes later in the year in September, and that's where they want to have their premium parked. Yeah,
that's interesting. And it kind of makes sense in some ways, like when you think of like the summer lulls and stuff like that.
Yeah.
Again, I just find it. I'm still of a view that I just think market is still under position risk and is going to need to rate higher.
But it needs to kind of know what's going to happen on the tariff front before it can really go.
Yeah, but then like you mentioned like the VIX coming like back to what, February lows or whatever you said it was. You have like these risk parity funds, right, which people talk about, which allocate risk according to
vol controlled
risk buckets, right? So when vol comes lower, then they add more leverage risk to those buckets.
Because it's formulaic, right? They're like, the amount of risk I'm allowed to take is a function of where the vol is.
Yeah.
As the vol comes down, I have to take more risk. As the vol goes up, I have to reduce, right?
Exactly. So I kind of think you're going to see equities, like it's going to be, again, another hated rally.
I think it's already pretty hated.
Yeah. I mean, Bitcoin's still got all these positive idiosyncratic factors driving it as well, which is still like sort of super positive. Really solid IPO from Circle the other day.
Yeah, well, what did it do? Tripled or something?
It definitely doubled. I didn't see where it ended up, but you know,
crazy.
So again, like all these sort of positive factors. No, I didn't. No,
I didn't either. That's not really my thing. But
no. Again, I always think like an IPO is like kind of a fade. but this actually kind of ripped. So,
interesting.
So yeah, maybe you could argue it was priced incorrectly to start with. But so we got all these positive things. And then the other thing outside of that, I mean, you had the ECB cut rates, for the 8th time in a row in the week, down to 2%. You've got China still injecting a lot of liquidity into markets and are still having to ease. So I just think I can see a bit of a summer melt up sort of rally in everything, where people are going to be forced to chase it. And I'm encouraged by how Bitcoin traded over the last week in terms of not breaking that 100K. Now maybe
implied vols are so low. They're on a 30 handle now in Bitcoin in the front end. I mean, that's about as low as it gets. Right? So
something's going to break, right? And hopefully breaks the right way.
Yeah. I mean, the last time we broke 110K, Vol didn't really react. But now that we've kind of been consolidating, Vol keeps getting squeezed lower and lower and lower. Then when we go again, if we do break the highs again and Vol's coming from such a low base, then it might actually react because everyone will just be like, it's a no-brainer to buy calls.
Which could be then rocket fuel for the move, right?
That could be fuel. Yeah, that's true. All right, cool. So who are you going to catch up with this week?
So looking forward to actually with Benjamin Cowen from IntoThe Cryptoverse.
Founder, right?
Founder, yeah. So this will be one for us to geek out on the macro and really interested to catch his views and thoughts. So I'll be catching up with him in a couple of days.
Cool.
Which we'll tag on to this, right?
Yeah, so remember, like and subscribe. But that is it from me this week. And away you go into the Cryptoverse.
Hi guys, welcome back to Crypto Options Unplugged. I'm delighted to be joined by Ben Cowen, the founder and CEO of IntoThe Cryptoverse. Ben, welcome.
Thanks for having me. A pleasure to be here.
Yeah, good to have you on. And I believe you were in Vegas recently at the Bitcoin conference. How's that?
It was great. Yeah, that was the first Bitcoin conference I've spoken at, so that was pretty cool. I got to meet a lot of great people, and I think it's my fourth Bitcoin conference that I've gone to.
Yeah, what was the vibe like?
I mean, it was pretty electric. I mean, there was like over 30,000 people there. So, a lot of excitement. The post-halving year conferences always feel a little bit more electric than all the other years. I don't think this one was any different. I mean, if anything, it was even more so because it was also in Las Vegas, right? So
Yeah. Oh, good stuff. Well, Ben, for those that don't know you, and obviously you've got a great following on social media and a great presence, but I'd love to hear a little bit about your background, how you kind of got into this space, and then what you're up to with IntoThe Cryptoverse, what the mission is there.
Yeah, so just quickly, I did my undergrad in mathematics, and while I was doing my undergrad, I took a cryptography class as a math elective. That's where I first got interested in crypto, but when I say crypto, I mean cryptography. But from that, I found Bitcoin, just sort of a natural extension of that. And then I went to grad school. I got my PhD in nuclear engineering, and while I was doing that, me and some of the other grad students got really into just kind of watching a price action, mostly of Bitcoin, because Bitcoin was like the only thing around back then, or the only real thing around back then. And so then I graduated with my PhD, and my dissertation was on radiation damage in ceramics, using molecular dynamic simulations and in situ transmission electron microscopy. Very different, obviously, than crypto. And then I went off to do during that time I was, of course, investing in crypto and making all the mistakes that everyone makes the first, couple of cycles. And then I went to the national labs. I worked as a postdoc in high energy density physics. And during that time, after about 1 year into my postdoc, I decided to start IntoThe Cryptoverse. And the primary reason was to basically develop some form of, method to the madness. I figured there's got to be a way to look at this volatility and stop getting wrecked, or help people to stop getting wrecked all the time in the bear markets, and to sort of look at it with a longer term view, and also kind of recognize back then the importance of like Bitcoin and Bitcoin dominance, and how the market is very, if you view the market through the lens of Satoshis rather than US dollars, I thought it made a lot more sense. So that's kind of how it started. And that was back in 2019. And here we are, I guess, about 6 years later, and it's still going strong.
So the kind of the macro, if you like, came a bit later then. So it was the cryptography first that kind of drew you in, and sort of the trading of Bitcoin, and then just you kind of started to think of a framework around all of this.
Yeah, I actually got into stocks before I got into crypto. But yeah, I definitely developed the macro framework through, and I remember back in 2019 when I started the channel, I kind of wanted to talk more macro back then, like back in like 2020, 2021. But I also knew like I felt like most people didn't care about it back then. And everyone just wanted to not talk about crypto. So what I told people, I was like, look, guys, we'll focus on crypto for the next couple of years, like exclusively, basically. But then as we get further out, other stuff is going to start to matter more, and we'll start talking about other things. I mean, even today, like the macro, while it's important, and I talk about it a lot, it's really hard. It's really hard to trade, you know, macro movement. It's really hard to trade based on macro data, right? You have to. It's a really long form trade, and a lot of people in crypto only care about like what's going to happen tomorrow or next week. Not really like a multi-year trend, and that's kind of the hard thing to sort of to marry. Like, hey guys, this is going to be a multi-year trend, but also we got to talk about what's going to happen tomorrow as well.
Yeah, no, I mean that's like all of my macro stuff tends to be sort of longer term, and like I want to capture those longer term sort of trends and thematics. I think for like 95% plus of people, they're going to struggle to outperform this market, particularly when you've got an exponential secular trend as we've got. So I try and kind of think more sort of longer term and where we're at within that trend, and look at some of the sort of potholes along the way, to try and at least avoid some of the sort of damage.
Right.
So how are you seeing the world right now, Ben? How are you characterizing things? Where do you think we are within this cycle, and where are things going?
Yeah, that's a good question. I mean, obviously, there's been a lot of volatility recently, especially after the tariffs. We're talking mostly about macro right now.
Yeah.
Uh, yeah, I mean, look. I mean, we've had a rising unemployment rate for a few years, but it's been fairly slow, right? It doesn't look as parabolic as we've seen in prior periods where the unemployment rate, really exploded higher in an uncontrolled way. It's slowly going up. But so far, it's been mostly controlled. Inflation is slowly going down. For a long time, I've just been in the disinflationary camp. Um, I do think that, that the tariffs might have some effect, but I think whatever effect they have, like, probably will be short-lived. I mean, I could be wrong about that. I used to be 100% in the disinflationary camp, and I'd say I still am, but I'd be lying if I didn't at least say, like, I don't really know how the tariff data is going to affect things. But for now, I still remain mostly in sort of the disinflationary camp. I think there might be like a little spike at some point that might spook the markets, but I'm not super concerned about it at the current time. I think the main issue with tariffs and whatnot, and the Fed, is that I think the threat of higher inflation that could be created by the tariffs might be more damaging than the tariffs themselves. Because I think there's a chance that it could make the Fed delay further rate cuts, right? I mean, we just had negative GDP in Q1, and you would think that that would be enough to make the Fed cut rates. The unemployment rate, it's getting kind of high. I mean, it's still relatively low, all things considered, but you would think the Fed would, perhaps throw the market a bone at some point, given, the slowdown that we saw with tariffs. But I mean, they're not going to, and it looks like they're not going until September. And I have to think that perhaps a lot of that is just due to them being fearful that inflation's going to come back later on this summer. I don't really think it's going to be as big of a deal as they're worried about, but it could make them slightly late to the party. But again, they're always late, right? They're late, and usually in both directions.
Yeah, exactly. So someone was asking me this today, actually, like, do I think they're behind the curve, and I'm like, they typically are behind the curve, just by the nature of the fact that they're looking at this backward looking data. And also I think the fact that, sort of monetary policy acts with what, a 12-18 month lag. So when they do start acting, that, and then they'll go over the top, because they'll do a cut maybe in September. I'm probably in the same sort of timeline as you, with that thinking, and then nothing will really happen, right? So maybe another cut, and then they end up sort of overcompensating. They're definitely obviously sort of concerned, about the tariff impact, which kind of reinforces in my mind the idea that they probably will make a mistake and be sort of behind the curve, even though they've said that they probably look through some of that impact. So yeah, we'll have to see how that sort of plays out.
Yeah, I mean, I think it makes sense that they're reactionary rather than trying to predict the macro, because I don't really think it's really difficult to predict the macro. I mean, a lot of the armchair economists back in 2022 were telling them they needed to cut rates back then, and obviously that would have been a mistake had they been cutting rates back in 2022 when the market was going down. So I think like it's easy to sort of criticize the Fed for being too late to things, but I also, if they were in the business of predicting what's going to happen, that would also probably go really poorly as well, because I mean, think about how much pressure that Jerome Powell has been under for the last couple of years by people to cut rates, and he hasn't done so. And the S&P 500 is still near cycle highs. Bitcoin is near cycle highs. It's like, what was the real justification for them to cut rates 2 years ago if the markets and the economy are still doing somewhat okay today? I mean, obviously we could get into an argument as to how well the economy's actually doing, but at least the markets haven't been too concerned just yet.
Yeah, no, 100%. And like I'm looking at the world right now, and I'd be interested to get your take. I've been calling it. I think we look quite Goldilocks. I mean, we have the uncertainty with tariffs, of course, like overlaying all of this.
Mm-hmm.
I agree. I feel like we're in a disinflationary world. Growth is slowing, not collapsing. So it was only a little. Well, you go back to April, and it was, we were pricing in some pretty bad scenarios, but actually things are pretty sanguine. It looks a pretty good environment for risk. How are you thinking about that?
Yeah, so my sort of outlook for this year, based back earlier this year, I thought we would be risk off between February OPEX and about early to mid-April. We've seen a lot of weakness around that time in post-election years, because Bitcoin really hasn't been around in a post-election year where the unemployment rate and inflation were kind of issues. Like, this is the first year where those were really issues in post-election years. Obviously, inflation kind of hit last cycle, but it really didn't start going up until the very end of 2021. So, yeah, I mean, normally, if you look at like 1969, 1973, 1977, 1981, all those years we had a new administration, we kind of had a sell-off in the market in that early sort of Q1 timeframe. Just kind of a lot of jitters with a new administration coming in, a lot of new things, right? Markets don't really like uncertainty. And so we saw this sell-off. So I've been in the camp that will likely see continued strength. At least, with Bitcoin, I thought we'd see continued strength until about mid-June. I could see it going into late June. I wouldn't really be that surprised to see it do what it's done the last couple of years, though, where like it gets a pullback sometime in like the August, September timeframe. Bitcoin's like, those are like the two worst months historically for Bitcoin. So that's kind of what I'm thinking right now. Like maybe strength for another couple weeks or so by Bitcoin. Maybe I think we might see some volatility compression this summer as people kind of go away and do their own thing. But I'm sort of thinking that this, obviously history does not always have to repeat itself, but I'm sort of thinking that, perhaps some strength for a little bit longer, a pullback into August, September, and then maybe another run up, like in October, back up to wherever we get the pullback from. I also would say, though, that I'm only talking about Bitcoin. I think a lot of the rest of the market, I think the altcoin market is going to really struggle against Bitcoin. I think all altcoins will likely continue to bleed against Bitcoin like they have been for the last 3 to 4 years. And I really don't think that's going to change. And the reason it's not going to change, not yet, is because basically because the economy is still doing okay, right? It's like if the economy were doing poorly, then it might lead to more rate cuts, and it might lead to an end of quantitative tightening, and the end of QT is what caused alts to really start doing well against Bitcoin last cycle. But until that stuff happens, I think the base case has to be that Bitcoin will likely outperform like basically the rest of the market on longer time frames. Now, any given week, who knows, right? Any given week, who knows? But that's my base case right now.
Yeah, so you're of the view that like in previous cycles with the alt season, that was more linked to rates and Fed QE or at least not doing QT. So that's kind of the trigger for you if we're going to see an alt season for that to occur.
Yeah. Yeah, I mean, I don't know if we're going to get one, but I would say if we do get an all season, the earliest it would occur would be November. And I don't even know. Like, I don't even know if we'll get one. It kind of, I mean, it probably depends on how the macro holds up. If we can, if we're right about sort of the disinflationary view and we're just sort of slowly going, let's say we're stochastically going down to 2%, that's a good thing. So it might depend on say like the labor market. If the labor market is still holding up well by November, then that could be the time. In fact, if you look the last 2 years, altcoins rallied against Bitcoin in November 2024 and also November of 2023. And when they rallied, it was right around the time that the unemployment rate was sort of finding a local top. So I think there's going to be some weakness in the labor market for the next, like, say, 3 to 4 months. We historically see initial claims go up into the summer. We saw it last year. We saw it the year before. And then when they kind of top out and start to come back down in Q4, that's when we've seen altcoins run up. So I don't know if we're going to get an alt season, but I will say if we are going to get one, I don't think it's going to occur before November.
Yeah. Where are you on the sort of 4-year cycle for Bitcoin? Is that being extended? Do you think we play out that kind of similar cycle? What are you thinking around that?
Yeah, I'm still a believer in the 4-year cycle, but I sort of think about it in terms of lows. Like, I think that the major lows are going to be every 4 years. And that's not even just a Bitcoin thing. I mean, even if you look at like the stock market, it often finds major lows every 4 years or so. I mean, even in the 70s, there was like a low in, what was it, 1970 to 1974, 1978, 1982. It's very common to find lows sort of around the midterm year or on the end of the midterm year. And so far for Bitcoin, that's what we've seen, right? We got a low in 2014, 2018, 2022. So my guess is that the next major low for Bitcoin will probably be near the end of 2026. So probably about 18 months from now will probably be the next sort of major low for Bitcoin, the next real big opportunity. And I think those opportunities only come around about every 4 years, right? So I'm going to guess that that's going to be the next big opportunity. But with that said, we've also seen diminishing returns by Bitcoin to the upside, but we've also seen diminishing losses where we don't drop as much. So while I think there will be a drop in 2026, I don't think it will be as bad as previous drops. If you look historically, right, we've had 4 bear markets, I believe. The first one was about 94% drop. The second one was about 87, and then it was 84, and then the last one was 77. So I'm thinking maybe about a 70% drop from whatever the top is to the next sort of major macro bottom. That's kind of my base case right now. And I think that'll play out by the end of 2026.
Yeah, interesting. I mean, I probably actually feel that, again, maybe talking my own book, but the drop will be less than that. Just because I think this cycle is so different with like the institutional players in the space. A lot less retail seems to be getting involved. And I think it's sort of some longer term money sort of really coming in, particularly when you look at the sovereigns and some of those holders, which might just protect us a little bit on the downside. But yeah, definitely aligned in your thinking on sort of timeframes, I think.
It's definitely possible. I mean, it's, no one truly knows. I think if it's going to happen, like the catalyst could be some of the late sailor copycats, maybe getting in a little bit too late with a little bit, maybe too much debt, too much leverage, whatever it is, right? It could just be the sort of the late copycats. Because I mean, again, normally when we get bear markets, it's the people that don't want to sell have to sell.
Yeah.
So that's good. If we have it, it's good. That's probably going to be the catalyst, but I don't think that's going to be an issue until next year. Because I mean, even though I can see that it's kind of like in the last cycle. I mean, everyone could see that all the crazy interest rates that people were offering were crazy, and that was likely going to lead to a big fallout. But even though you can kind of see it coming from a mile away, it took like the market 1 to 2 years to care about it and for that stuff to actually play out. So I think it's probably going to play out, but I don't think it's going to play out till next year. And I think we probably will see diminishing losses once again.
Yeah. Before we get that pullback, where do you think the highs go for Bitcoin?
So, I mean, in the short term, I guess I'm sort of in the camp of like, we could go slightly higher in the short term. post-halving year,
120K type stuff,
what?
120K type levels.
Yeah, I mean that's always a possibility. Yeah, for sure. I mean, I think that in the short term, I don't know how much higher we'll go in the short term. I do think though the problem right now is that there likely will be some weakness in Q3. So I think that if you are going to get a much higher move up, it probably won't occur until say like later on this year. And then again, that's whole of course if the macro holds up. But again, no one knows. I mean, I think Bitcoin is a much better hold than most everything else. So I continue to hold that. And by the way, I mean, even if we do get a drop in Q3, we'll likely come at least even in a bad case scenario where we go down, we'll probably still come right back up to where we currently are because the market will continue to try to go higher. I think there's a really good chance that Bitcoin can go higher, but again, I'm not that convinced that altcoins collectively are going to follow suit. So at least not for a while. So I'm still in the mostly just Bitcoin camp. I do own a little bit of Ethereum because, just in case it gets moved back up. But yeah, I mean, that's kind of where I am right now.
Yeah. I mean, my worry into Q3 is the debt ceiling. And once that gets resolved and lifted, which it will, and then they've got to rebuild the TGA and all this stuff. Typically we see a lot of liquidity drain out, and that's when I think we get like a pretty nasty correction before all the monetary operations come in and they're not QE and then that's probably see your idea playing out.
Right, but again, I should stress in the short term, I still think Bitcoin can show some strength, right? I mean, we're still in June for now.
Yeah.
And I think that, yeah, I mean, we do have CPI coming up in a couple of days, and then we've got FOMC in like 7 or 8 days from now. So that might actually cause some short-term volatility. But I still expect the bulls to try to remain in control for at least the next couple of weeks. And I just think, yeah, you're right. I mean, once you get into that July, August, September timeframe, you'll probably get a pullback and then probably a bounce sort of going into October.
How much, Ben, do you think about the rest of the world and how that feeds into your analysis?
Yeah,
the Fed is central to everyone's thinking, and the US. But yeah, what else do you look at that's interesting to you?
I mean, I follow the Bank of Japan a lot, and how other currencies are doing with respect to the dollar. What's really interesting is if you look at the Bitcoin USD pair, it put in a new all-time high. But if you look at it on many of its other currency pairs, it has not. Like if you look at the Bitcoin against the euro, it still has not even taken out the high from January, which is crazy to think about. Or against the yen, I don't think it's put in a new all-time high since January. Also, total market cap has not put in a new all-time high, but Bitcoin has. So I do think that other markets have certainly affected things. If you look at the Bank of Japan, anytime they've raised rates over the last like couple of years, it has led to a sell-off in crypto. Normally the market kind of sells off before that, and then it kind of capitulates 1 to 2 weeks after the Bank of Japan raises rates. It happened in January when they raised rates. It happened in August last year. They raised rates in July. We had a drop in August. They also raised rates last March, and we had a drop in April last year. So I'm following that. I'm trying to figure out when is the Bank of Japan going to raise rates again. They have a meeting next week. Fortunately for us, I don't think they're going to raise rates next week. I do think the absolute earliest they would do it would be July, but I think consensus is September. I think consensus is September, which is really interesting because if they raise rates in September and the Fed cuts rates in September, then that could lead to the unwind of the carry trade, which we saw last year, where it could just be a brief drop down kind of into that Q3 period, unwind of the carry trade, and then you get sort of a bounce out of it. But that's kind of what I'm looking at, and I think that might be the catalyst, sort of what you see the Bank of Japan do. And the issue with them is that while we're over here in a disinflationary environment, they're going more into an inflationary environment in Japan. And the reason for that, of course, is because when the rest of the world was cutting rates, they were not. When the rest of the world was raising rates, they were not doing anything. And now they're starting to see inflation go up, and they're going to have to deal with that.
Yeah. Whilst trying to somehow control the yield curve.
Yeah. I mean, Japan is a really interesting case for sure. I mean, I find what they've done over there absolutely fascinating, but I really hope I hope the Fed never goes that direction.
Yeah, I mean, this is. I mean, I always talk about these like impossible choices. These central banks and governments face, just given the mess they've created in these high debt economies. In actually, everyone was so worried about like deflation for a lot of years, and we struggled to kind of get any inflation. But actually, it's been that which has allowed them to, keep liquidity high, keep servicing a lot of this debt. And now all of a sudden you got Japan kind of scrambling a little bit. How do you keep a lid on the yield curve when that starts getting out of control? And how does that sort of fit with what you're trying to do from a monetary policy point of view? Yeah, it creates some difficult moments. Obviously, the big blow up with the bromance with Musk and Trump. What are your thoughts on that?
Yeah, I mean, it's not entirely unexpected, honestly. Because I mean, every politician forever always promises to like cut spending and balance the budget, and then basically every politician ever never does that. So it was it always felt like something was going to kind of go awry at some point. And I mean, it just goes to show you, like, you can kind of understand both views, right? Like, I feel like if you're objective, you can kind of look at both views, right? I mean, if you're Trump, you don't necessarily want to be the president that, I mean, you want to cut spending, right? I mean, there is a lot of extra, but also if you cut it too much, then you're going to lead to a bad recession, right? Because a lot of real GDP, a lot of it is just federal spending, right? I mean, there's a lot of it that just comes from the government spending. And so if they were to really cut spending, then it would likely lead to a pretty nasty recession, right? If they actually went through with a lot of kind of what they talked about. And so, I mean, obviously he wants to increase the debt ceiling. He doesn't want to have to deal with that under his tenure. But if you're Elon Musk, you're probably like, well, hold on a second. I just spent the last few months trying to, with DOGE, the Department of Government Efficiency, trying to cut all this waste, fraud, and abuse. And we've saved a few $100 billion. But what's the point of saving a few $100 billion if you're just going to raise the debt ceiling by $5 trillion, And I think that's kind of where Elon Musk is coming from. So I can honestly see both views. I think that, Elon wants to deal with the problem now, and he doesn't want this, for us to continue to run our debt, because we will eventually have to pay the price for that. Like, I mean, like, either we will, or our kids will, or our grandkids will, right? I mean, eventually someone's going to have to pay the price for everything that we're borrowing, because we're just borrowing from future generations, right? But, obviously if you're a politician and you're only going to be there 4 years, why deal with it when, your successor can deal with that problem? So I think that's what's happening, and I sort of see both sides, but I'm not surprised.
I think that's a really good point, and I guess it's like, underpins my long-term thesis for Bitcoin, because I don't actually see a way that we get the debt under control at any point, because no one's ever going to be incentivized to, right? Because no one wants it to be on their watch to come in, right, for 4 years and say, look, we're going to get a handle on this. We're going to get things under control, but it's going to be a pretty shitty 4 years as we sort of adjust to that. Everyone's just going to kind of lean on, as Besant has now done, with we'll grow our way out of it, but you're not really
right
out of it, right?
Well, and Trump already had one 4-year term, so I mean, this is his last one, right? So it's not like he has the luxury to come back again and, sort of in this term get it under control, and then maybe next term try to, get things back to normal. Like, this is his last term, so I imagine he would prefer to not have to deal with that. So yeah, I mean, they almost assuredly will raise the debt ceiling, and I think it's kind of funny that they call it the debt ceiling at any point, because it only ever goes up and to the right? Like, the debt only ever goes up and to the right. So like, the idea of a debt ceiling is just kind of funny, like, we're just sort of making it up, but we always just raise it anyways.
Yeah, it's more like a debt target. And the months we debt that.
Exactly. That's probably a better terminology for it.
Yeah. So something else that I'd be interested to get your thoughts on, Ben, and I just feel it's something that's overhanging, like, the market and just any kind of long-term thesis, like, I don't think many of us have really got a handle on, is AI and the impact of AI. Yeah, because it feels like it's here now, and the impact is going to be felt, and is being felt already, and it's going to be, kind of felt increasingly over the next few years. How do you think about that? What are your thoughts on what AI is going to mean for the economy, and how do you think about that from an investment standpoint?
I mean, honestly, probably similar to like what happened when the internet was sort of arrived, where some jobs were lost, right? A lot of jobs were lost. And if you think about what happened with the internet, it destroyed a lot of jobs, but then it also created a lot of other jobs, right? So, spreadsheets and other things became more prevalent as things grew. So I kind of think that's what's going to happen with AI is going to destroy a lot of jobs. It's already destroying a lot of jobs. If you look at like job postings for software developers and a lot of other fields like that, they're really low, right? I mean, they're well below pre-pandemic levels for the most part. And I think, and I've talked to a lot of entrepreneurs, and for them, if you're starting up a company, you might used to have, say, like a normal startup, before you probably would have hired 20, 30 developers. Now you can hire just a few and they can fill in the gaps with AI, right? I mean, even my team, like, we'll use AI to help with sort of the programming side of things occasionally. And I think that's fine. But I do think it will lead to some jobs being lost. But I do think it will lead to the creation of other jobs. It might help us focus our energy on things that are more useful to society, right? So instead of getting stuck with all the mundane tasks that, someone has to do, right? Increasingly AI will likely take that over, and hopefully it'll allow people to focus on other more exciting things. So I'm relatively optimistic on it from like just like a macro view. From the investing view, it's a lot harder because in the short term, right, it could lead to layoffs, right? And we've already seen that. I mean, people, companies are just not hiring as much. They are, a lot of it's just being lost to attrition, though. I mean, layoffs are still relatively low, but I could see a scenario within the next, say, like 2 to 3 years where, the Fed maybe does aggressively cut rates. I don't think they're going to aggressively cut rates like right now, like or anytime soon, but whenever they do, I almost wonder if there's gonna be like an oh crap moment where they like cut rates and people still aren't hiring because like they're using AI, right? I think, again, if you look at one of the metrics that Powell frequently talks about is the, number of job openings per unemployed worker. And it's sitting right now at 1.03. So there's about one job opening per unemployed worker. I think they think that whenever they cut rates aggressively, a lot of job openings are going to come back. But I wonder, I mean, I think in some industries they certainly will, but I don't think they're going to come back in all industries. So I think it's going to change the landscape some. As far as investing, though, I mean, I don't really, I mean, I think honestly, I mean, it's the most boring answer that anyone could ever give, but it's really hard to, and from the stock perspective, it's really hard to beat just low expense ratio index funds. Those are going to outperform most every single investor, most hedge funds, most everything. So that's probably the best way to capture whatever gains are in that. And by the way, even if from an investor perspective, if you are worried about layoffs, you also have to remember that even if they are laying people off, if AI is making the company more efficient, the stock price could still go up, right? Even if because it's just leading to sort of more efficiency.
Yeah, I'm very much in that camp. I mean, I say in like my newsletter and stuff, I find it really difficult to see why you don't much outside of essentially NASDAQ and Bitcoin right now. The two big secular trends, becoming more tech. One last question before I let you go, and just given your background and your physics brain, how do you think about the risks of quantum computing to Bitcoin? I know Michael Saylor was dismissive of it the other day. What's your take on that?
Yeah, I think I've been asked this question like, I don't know, like every year for the last like 6 years. And yeah, like, I mean, at some point it probably poses a risk, right? But who knows when that's going to be, right? I mean, like, I remember back in even in 2017, I didn't have a channel back then, but I was informed, people were talking about it, people were worried about how this would affect Bitcoin. And I mean, if you say didn't invest in Bitcoin because of that worry, I mean, look at what Bitcoin did over the last 10 years.
Yeah.
So yeah, I would say, yeah, like it is a risk, but I also think there's probably other risks that are more important to think about, right? In the sort of let's say the next 1 to 2 years, and that's more of like the macro. How does the macro hold up? And I do hope. I mean, I would hope that Bitcoin could evolve to accommodate that as well, right? So I don't know exactly what that would mean, but hopefully Saylor is right in that like it's protocol and it could be certain things can be changed, but it's not really one of my primary concerns right now. I remember worrying about it a lot in 2017, 2018, and I was like, you know what? I can't spend my entire life working on this. I'm just gonna forget about it, and if it's an issue one day, so be it. But
yeah, and I guess it's if you're worried about what it's going to mean in terms of potentially breaking Bitcoin, well, it's going to break the traditional system far more quickly, I'd say.
Right, yeah. I mean, if it's going to break Bitcoin, it's probably going to break a lot of other things as well. And if that happens, like, Bitcoin's not going to be the primary concern in the world at the time. Like, there's going to be a lot of other things that are probably going to be bigger issues.
Yeah. Well, Ben, that's great. Really appreciate you coming on. Really interesting conversation. Really, thanks for your time. Really appreciate it.
Absolutely. Thanks for having me.
Yourself. And guys, remember just to like and subscribe so we can get more guests like Ben on every week. And we look forward to seeing you next week. Take care, guys.